The major US stock indices recovered from last Friday rout, led by the Dow Jones Industrial Average and as well as the small cap Russell 2000, both of them recording a gain of 1% yesterday, reinforced by a better than expected US ISM manufacturing PMI for January that finally rose to above 50, which is a sign of expansion after a year long of contraction. And that latest number also was the highest number since 2022. Gold continued its sell-off for the second consecutive session on Monday, but managed to trim its losses and find some form of minor stabilization at a key short-term support on the US dollar 4,400 per ounce. Very good morning to all and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Tuesday, the 2nd of February 2026. So as usual, let's have a quick look at the disclaimer first. Pardon me. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. So today's session will be a much more of a toned down session. So we'll be covering only charts of the day and as well as some snippets of what has taken shape yesterday in terms of their significant reference towards the global market. So let's start with the reading of the US ISM manufacturing data for January. So let me share my screen over here. Okay, so what I could see over here is that on the economic calendar, okay, couple of seconds. Good. Right, so ISM manufacturing PMI finally rose to a expansionary phase for the month of January to 52.6. So we know that PMI data is being configured in a way that anything that is below 50 is considered contraction, anything that's above 50 is expansion. So after months of contraction for close to about a year, the US ISM manufacturing PMI finally rose to 52.6. And that actually surpassed expectation of 48.5 and also the previous December print of 47.9. So bear in mind that the US economy right now under the Trump's administration is kind of undergoing a structural change in the long term, where the current White House administration, the main aim is to get US or transform US into a global manufacturing hub. And this manufacturing hub is talking about high-tech manufacturing hub that's centered around AI team over here. So if you look at the trend of the artificial intelligence, it seems to me that the US administration is hoping to get what they want in the longer term. So it rose to 52.6. And this reading is the most since 2022. So if you look at the trend, the 10-year trend, you see a sudden spike up over here, right? So it seems to us that since 2021, during the the onset of this Russia-Ukraine, we call it tension or conflict, U.S. manufacturing activities has been a slow decline, and it seems to us that they have started to form a major base since 2023. And after 1 year plus of sluggish, we call it a reading since the start of January 2025, and finally we managed to see some light out of it over here. So right now there's some structural changes that's going on into the US economy, which means that it's going in line with US President Trump aim of making US a high-tech manufacturing hub again globally, and which means it potentially could translate into this ongoing sector rotation in the US stock market, where we start to see materials, industrials, and as well as in some form energy stocks outperforming the broader market and also outperforming the technology space in the next few months down the road over here. So something to bear in mind for if we take in correlation with the performance of the various US sector. So with that in mind, so that's actually explained to us why the non-tech heavy indices managed to outperform the US stock market inside the US stock market yesterday, where the Dow Jones rose by 1%, the Russell 2000 also by 1%, a small cap, whereas the Nasdaq 100 only rose by 0.73%, and the SPX rose by 0.9%. 5% over here. All right, so a clear we call it a sector rotation at play, where potentially we may continue to we will potentially likely to see outperformance of non-US tech names in the months ahead. All right, and it's being supported by yesterday's release of this very strong ISM manufacturing PMI data up from US for the month of January. So one thing to share with you guys over here is that there's some positive feedback loop, at least on a minor scale for the Nasdaq 100 E-mini futures and the S&P 500 E-mini futures. So we know that the Nasdaq 100 E-mini futures, or the Nasdaq 100 itself, is being heavily centric to technology name. Any may not say any significant technology stocks earnings could drive a positive feedback loop back into the Nasdaq 100. So the Nasdaq 100 E-mini futures is trading right now in Asia session as we are speaking, 11:07 a.m. Singapore time. Managed to extend its gain in today's Asia session, up 0.32% as we are speaking right now. And in some form, the E-mini futures, which also has a significant weightage on the technology sector, is up by 0.15%. So what causes this positive feedback loop both on the Nasdaq 100 E-mini futures and the S&P 500 E-mini futures in today's Asia session, as we are speaking right now, 11:07 a.m. Singapore time, is a rather rosy profit revenue guidance and a earnings upbeat for Q4 earnings for Palantir. So we know that Palantir is also one of a put it away that one of a major US technology stocks that has been caught on the watch list for major for big fund managers and as well as several retail traders due to its linkage with AI services and products. More primarily, their business aligns with the US government over here. So it beats fourth quarter estimate on the strength of AI and defense demand. So we know that defense demand over here is pretty much in line with the current expansionary foreign policy that the current White House administration is embarking on over here. So basically, EPS 25 cents adjusted versus 23 cents expected. Revenue 1.41 billion versus 1.23 billion. So they have a very strong bid on that. So that actually created a positive feedback loop into the Nasdaq 100 and the E-mini futures. All right, contract that is trading during the Asia session. All right. So with that, let me very quickly now go on to the second segment of the daily dose over here, which I'll share with you. Firstly, will be the updated levels on the major US stock indices after yesterday's price movement over here. And thereafter, I will share with you guys two charts of the day as well. All right. So with that, let me expand my screen over here. Okay. So let's start with the major US stock indices updated technical levels. All right, starting with the US Wall Street 30. So the US Wall Street 30 is representing the Dow Jones Industrial Average. So yesterday we have a neutrality stand, so neutral between the 4,480, 4,340, and the upper limit is at 4,960. So I could see over here is that it went below our he hit our neutrality limit exactly, which is also the 50-day moving average before shaping that spring that what I call that very V-shaped vicious bounce up and cleared back above the 20-day moving average and also cleared above the upper boundary of yesterday's neutrality zone at 49,260. So with that, the price action also now managed to stage a bullish breakout from this former minor descending trend line resistance that I drew from the high of 23rd of January. Can't break out on last Thursday before shaping that residual push down. So yesterday residual push down was made exactly at the 2 p.m. Singapore time yesterday before the start of the London session, before price action reacted very strongly. So given that the hourly RSI now is at the overbought level, but no bearish divergence, so there could be some form of a minor pullback today after yesterday's strong push. So minor pullback support level to watch out for will be at the 20-day moving average, which is yesterday's upper neutrality range limit at 49,260 over here. Pivotal support will be very close to this former descending trend line resistance, now turns into a pullback support. And if you do the Fibo retracement of this entire strong minor V-shaped recovery from the low of yesterday's London before the London session open, all the way up to yesterday's US session high that comprises with a 38.2 Fibo retracement, and also the former minor swing high area of 30th of June, 30th of Jan, pardon me, where the price action fails to break during the start of the US session. Then thereafter, we start to see that sell-off taking shape on last Friday, giving us a very making it a very significant sentiment psychological level. So with that, we will have a bullish bias today on the US Wall Street 30, US Wall Street 30 with these updated levels. Bullish bias will maintain as long as 49,050 short-term pivotal support holds in any form of the maximum pullback allowable before seeking out a new higher high, with the next intermediate resistance coming in play on the intraday basis will be at 49,606 over here, which is the current all-time high level, followed by the next intermediate resistance at 49,805, 49,840, which is a Fibo extension cluster level. So if we do the latest Fibo extension cluster level, taking into account of this latest higher low, this low slightly higher than this low, and where it bounced exactly off from the 50-day moving average, giving much prudence for the start of a potential impulsive upmove sequence on a very short-term intraday basis. So if we do the Fibo extension level, the next level after 49,840 will be at 49,980 level. Right, so let me put it. Okay, 49,000. $980. Okay, the 1.236 Fibo extension taken. Sorry, let me do a proper one. I think I didn't snip it properly. Right, so it's actually 5,030. Okay, put it in writing. Okay, so this will be the US Wall Street 30. Failure to hold at 49,050 and an hourly breakdown with hourly close below it, that would invalidate today's bullish bias to see another round of choppy corrective movement to drift down back again to revisit 48,713, pardon me, and the all-important minor swing low area that took place yesterday that created that vicious minor V-shaped recovery, which will be at 48,480, 48,340, that confluence with the rising 50-day moving average. Next up, the S&P 500, also very similar V-shaped movement as well. So given that now it's retesting the current all-time high level, so RSI hasn't hit the overbought level yet, all right, over here. So given the fact that if we could have a direct push up thereafter with an hourly close above 7,014 level, then I will have a rather tight short-term pivotal support level for today at 6,948, which confluence with the 20-day moving average. If price actually starts to drift downwards and starts to go sideways again, I'll rather have yesterday's V-shaped recovery low as my pivotal support level, given the last few days or rather a wild swing on the S&P 500. If we have a very short pivotal support that's very tight, we may get a whipsaw, given the fact that the key intermediate resistance zone hasn't been surpassed to the upside yet. And this is very key because previously it tested on the 13th of Jan, got rejected, tested again on last Wednesday, and tested again on Thursday, it got rejected as well, 3 times in a row for last week, 3 times so far. So that will be my key pivotal support level for today, 6,877, 6,860, which confirms with the rising 50-day moving average. Above 7,014 level will be at 7,380, 7,045, followed by 7,074. Only a bearish breakdown below 6,860 and an hourly close below this level here that would invalidate the bullish bias on the SPX 500 to see another round of choppy corrective decline to seek out the low of 21st of January at 6,796. Failure to hold this level will expose the medium-term pivotal support area at 6,733, 6,720. A quick recap, that actually confluence with the minor swing low of 18th of December. Okay, lastly will be the Nasdaq 100. So the Nasdaq 100 also has this vicious push-up and reintegrate back above the 20 and the 50-day moving average again over here. So with that, I will have a bullish bias for today, given yesterday's strong push up as well. And also we start to see a bullish divergence that's being flashed out yesterday. So yesterday we do have a bearish bias. To recall that our first support level hit at 25,092 when we have that daily dose session live at 11 a.m. Singapore time. So it printed a low of 25,084 on at 2 p.m. Singapore time before the start of the London session. Then thereafter it stabilized and did that V-shaped recovery. So it actually indeed hit our support before it bounces upward. So given that now it reintegrated back above the 20 at the 50-day moving average, at least there's some form of intraday bullish tone that has started to come back into the Nasdaq 100. So with that, I will have a short-term pivotal support level at 25,360 over here, which confluence slightly below the 50-day moving average. And this previous minor swing low area broken down on yesterday's Asia session and managed to reintegrate back above it. And if we do the Fibo retracement of yesterday's vicious V-shaped intraday recovery, oops, sorry, let me draw it again. Okay, that coincides with the golden ratio of 61.8%. So as long as any minor pullback didn't surpass below 25,370 for today, we will have a bullish bias. Two resistance level to watch will be 26,016, followed by the current all-time high level at 26,290 has yet to surpass since October last year. Only a bearish breakdown below 25,370 that would invalidate today's bullish bias to see a retest of yesterday's V-shaped recovery low at 25,092, maximum the 21st of Jan minor swing low level at 24,924. All right, so these are the next two support levels to watch: 25,092 followed by 24,924. All right, so that sum up the updated trend key levels and updated trend bias on the key major US stock indexes. So now let's proceed to the chart of the day. So the chart of the day, one thing I will share you will be the Aussie dollar over here. So before I start sharing the Aussie dollar, why Aussie dollar will be my chart of the day, because it will link up to the very important RBA decision today at 11:30 a.m. Singapore time. So why is it important? Because RBA market is expecting, based on the overnight swaps market, and as well as a poll by the survey done by Trading Economics, we are expectation for a 25 basis point increase by RBA is pretty high for today. So previously it's at 3.6%. Now market is expecting to go up to 25 basis point. Given the fact that the Australia economy, there's still some signs of turning hot, given the fact that the labor market is pretty much resilient and inflation trend continues to hover above RBA upper limit target of 2/3%. So back to the chart over here. So if you look at the Aussie dollar chart on the daily time scale over here, which talk about the medium term trend, it has a bullish breakout from this long-term circular descending trend line previously running from the high of 25th of February. And on 23rd of January, which was 2 Fridays ago, it managed to stage a bullish breakout above this expanding wedge configuration that has been in place since May 2025 last year. So that's close to about coming to what 10 month old resistance. All right, and what we could see is that 1, 2, 3, the 3-day of pullback managed to shape a bullish hammer candlestick yesterday, and that exactly comes in line with the rising 20-day moving average. So net overall, what we could see now, the Aussie dollar is in transit, is in a major / medium term uptrend phase. All right, and yesterday's and that prior 3 days of minor pullback may have already ended, and we could now potentially see the start of a new bullish impulsive up move sequence coming into the Aussie dollar that coincide with today's significant risk event that has a direct impact on the Aussie dollar, which is RBA interest rate announcement. Then thereafter followed by that has already been penciled into the market, unless RBA doesn't cut, and we may see a steep fall on the Aussie dollar. And the next thing to look out for will be on what time would it be? At the press conference at 12:30 p.m. Singapore time, that will allow us to have the latest monetary policy guidance out from the RBA Governor Bullard. So back to the charts over here. So we will have a very a tightened short-term pivotal support level, which we have yesterday, where price action rebounded as intended, which is so very close to this dotted gray line here, which is the former expanding wedge range resistance that is running from May 2025 high, now turns into a critical key sentiment pullback support level. So no change in terms of the pivotal support, 6907/6890. And given that the hourly RSI has just shaped a bullish breakout over here in terms of momentum is getting strong on the upside. So we will feature this as our chart of the day, given this kind of positive technical elements that is building up on the Aussie dollar with a tight pivotal support at 6907, 68090. Three key resistance level to watch on the intraday basis, 6977, 7025, followed by the current 52-week high, which is also the last Thursday, 29th January swing high at 790. All right. Above 7090 potentially seeks out 671.40 next. However, a bearish breakdown below 6890 would invalidate today's bullish direct bias scenario and see another round of minor corrective decline sequence extending further towards the downside to expose 6835 followed by 68 figure level, which is the rising 20-day moving average. If price action dip down to the 68 figure level, I'll be on the lookout for a bullish reversal elements to flip my bias back to the bulls again, given the fact that the longer term trajectory for the Aussie dollar remains constructively bullish, potentially as I highlighted on the daily chart a while ago. Okay, last chart of the day to share with you guys will be gold, XAU/USD. So still recall gold yesterday, we do have a bearish bias, but once it hit the 4,550, 4,405, I'll be on the lookout for bullish element. And that bullish element indeed takes shape, where it shaped a bullish hammer. Bullish hammer appear at the 50-day moving average, appear at the 2 times Fibo extension level, drawn from this ongoing decline or corrective decline taken from the current all-time high of 5,602 on 29th of January, and also confluence with this medium-term ascending channel support drawn from the low of 28th of October. So given that right now we have some short-term bullish elements that starts to trigger in on gold XAU/USD, and with the hourly RSI breaking above previous resistance level as well, indicating that bullish momentum has started to creep back, at least on the short-term/intraday basis. So with that, I do not want to have a very tight pivotal support level. So first support level to watch for today will be at 4,617 over here. So unless we have a bullish breakout above 4,942, then my pivotal support will be at 4,670. So pivotal support will be yesterday's low, yesterday's swing low, which is the low of that bullish reversal hammer candlestick on an hourly basis that's formed at 2 p.m. Singapore time. So that will be at 4,405. So 4,405 for now, short-term pivotal support level, maintain this bullish bias on gold XAU/USD. Two key resistance level to watch out for today, 4,942 followed by 5,169. So unless we have a clear bullish breakout and hourly close above 4,942, then I will tighten my pivotal support level to 4,617. Above 5,169, potentially may see a retest on last Friday Asia session swing high before that collapse take shape. That will be at 5,448. All right, let me put it in writing. 5,448. Okay, and a breakdown below 4,405 for sure, that would invalidate this intraday bullish bias on gold XAU/USD to see another round of potential corrective decline phase, much more pronounced, extending further towards the downside, exposing the next intermediate support level at 4,285, 4,129, then followed by 3,886, which correspond to the key 200-day moving average as well. So 3,886 so far is the minor swing low of 28th of October. Okay, so that's gold, another chart of the day. All right, so that sum up the second segment of the daily dose. So before we go, let us take a look at the economic calendar. What are the key data to look out for today? other than RBA meeting, which potentially could happen 5 minutes from now. So given the fact that today European session, we'll see the preliminary inflation data out from France, which is the second key European economy within the Eurozone. So that could have a potential impact on the euro dollar, the euro crosses, and in some form the Germany 30 CFD index. So that will be out at 3:45 p.m. Singapore time over here. So market participants will be looking at the harmonized inflation rate, which is the core inflation rate, stripping off the volatile items like energy and food. So market expecting a rather a lackluster number. So 0.7% year on year was December. So market is expecting a slight dip to 0.6% year on year for January. So this will be the preliminary figure up from France. Then at 9 p.m. Singapore time, you have a Fed official speaking, Fed Birkin. And going forward into the US session, it will be a rather quiet session. And bear in mind that today we'll continue to see earnings results coming out from one of a significant technology US stock as well, which is a semiconductor stock, AMD, Advanced Micro Devices. So AMD will report its Q4 earnings after the close of the US session today, which is eventually will be at 4th of February Singapore time, Thursday after 5 a.m. So that could potentially influence the Nasdaq 100 futures and the S&P 500 futures when they open for trading in tomorrow early Asia session at around 6 a.m. All right, so that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.